Insurance cannot be just given away so easily. It has to be understood on a cooperation basis. So when the insuring company as well as the insurer try to understand each other in good faith and they proceed together in order to build this entire concept. So if there is any damage occurring to my house or to my factory at any given point of time, that will be covered under the Insurance Act. Good morning and welcome to the third session of Unit 4 in Management of Banking and Insurance Services. And in this, we are going to speak about the principles of insurance. Now, every sector, every business has got its own modes and principles to work out. So even insurance is subjected to certain principles, certain factors, certain rules that have to be followed and based on which the entire business exists. So let's go forward. Try to understand what are the principles of insurance. Now, the first thing is that the concept of insurance is a risk distribution among the group of people. Hence, cooperation becomes the basic principle of insurance. Insurance is not a one-man activity or a one-man show, but insurance is the factor on which the entire thing is being based upon. So what we tend to do here is that we tend to understand insurance more from an group perspective rather than an individual perspective. The concept of insurance is all about the risk distribution factor. So when we talk about insurance, it has to be in risk divided among so many people and everybody has to cooperate in order for the business to happen. Now, the risk concept is so well divided and so well understood altogether in terms of insurance that you need to understand that insurance cannot be just given away so easily. It has to be understood on a cooperation basis. Now, some of the 7 principles under which the entire insurance sector is based upon is utmost good faith, proximate cost, insurable interest, indemnity, subrogation, contribution, and loss minimization. So these are the 7 principles under which the entire insurance company works. Now we are going to look into each and every principle, try to understand why these principles are mandatory for the insurance company to function. Now, the principle of utmost good faith. The fundamental principle is that both the parties in an insurance contract should act in a good faith towards each other and they must provide clear and concise information related to the terms and conditions. The insured should provide all information related to the subject matter and the insurer must give precise details regarding the contract. So this becomes very, very important for each one of us at this juncture, at this stature to understand that the fundamental principle here is that both of them know each other in terms of the insurance policy, in terms of the insurance matter altogether. Why? Because now when the parties who are getting into the insurance contract, they need to know that whatever knowledge, whatever factors that are going to be declared under the insurance policy has to be of good faith, has to be of clear knowledge, and has to be as ethical and transparent as far as possible. If any one of them try to cheat the other person, automatically the insurance will get completely cancelled. So when the insuring company as well as the insurer try to understand each other in good faith and they proceed together in order to build this entire concept. Moving forward, let's talk about the principle of proximate cost altogether. Now, when we talk about this proximate cost, this is also called as causa proxima in terms of Latin, or the nearest cost. Now, why we try to get into this principle is that it says when loss is a result of two of more causes. The insurance company will find out the nearest cause for loss to the property, and if the approximate cost is 1 in which the property is insured, then the company must pay compensation. If the cause of the property is insured against, then no payment will be made by the insured. Now, it's a very, very important factor for us to understand. Why? Because whenever we are taking insurance, the insurance is coming under certain terms and conditions. So the insurance believes on the factor that whatever happens, there are minimum 2 causes or more than that for a particular incident to happen. Now let's say that there is a fire insurance that is being taken against a particular property. Now, due to a fire accident, the person goes and tries to claim the fire insurance from the company. Now, the company will assess the situation based on 2 factors. Whether that happened accidentally or it has been planned in nature. Now, moment you try to understand that it has happened under natural circumstances and that particular clause is being covered by the insuring company, automatically you will be getting your payment. In case if it has been proved otherwise wrong, then it is against the insurance company and you will not be able to get any payment for that. So that is why we say that insurance is always under the proxima factor, which means to say that we will first try to assess the result, outcomes coming in 2 different or multiple angles. Moving forward, the principle of insurable interest. Now, this is very, very important when we try to understand the insurance concept. The principle says that individual insured must have an insurable interest in the subject matter. That means insurable interest is that the subject matter for which the individual is taking the insurance must have some financial gain to the insured. And if it leads to financial loss, there is any damage or destruction or loss that has been happening. Which means if I'm going to cover my house, or if I'm going to take a marine insurance, if I'm going to take a life insurance, if I'm going to take something which has got a financial gain and insurable interest, then only the insurance itself becomes valid in nature. If I'm just taking an insurance without the subject matter of financial gain or without the subject matter of true insurance coverage, then there is no point in going in for an insurance factor. So what we try to do here is that I am taking an insurance for my house or I am taking an insurance for my factory because there is some financial gain out of that property. So if there is any damage occurring to my house or to my factory at any given point of time, that will be covered under the Insurance Act. So I will be able to get back some money in case of any kind of incidents happening altogether. So that is why we say that the subject matter of insurance is very, very important. You cannot take insurance on a general basis. You cannot take insurance on the matter of a general clause altogether. There needs to be a subject matter of importance. It should be insurable in nature. So that is why insurance always harps upon this particular policy. Now, moving forward, the principle of indemnity. Now, what does the indemnity principle tries to tell you? That means insurance is done only for the coverage of loss. Hence, insured should not make any profit out of the insurance contract. In other words, insured should be compensated the amount equal to the loss or not amount exceeding the loss. The purpose of indemnity comes into principle, that is to set back the insurer up to the same financial position in case of any damage happening so that his business is restored back in time. Now let's try to understand this clause altogether. It says that insurance is only there in order to back up the loss and not to make any profitable gains out of it. I cannot go and cheat the insurance company and make money out of it. That is not the aim of an insurance coverage. The insurance coverage aim is to see that they cover the loss at any given point of time. So when that loss happens, the value of the loss is assessed and an equivalent amount of that is being returned back. You cannot pay more than the amount of the loss factor altogether. So what we try to do here is that we try to help the person to come back to the same financial position as he was before the incident took place. So insurance is only a coverage factor. Insurance is only a subject matter of coverage which goes forward and tells the people clearly that this is what we are looking into and this is what we want. We are not trying to go into a situation where insurance itself will try to go forward and make any profitable gains or profitable factors altogether. Moving forward, the principle of subrogation. Subrogation means that one party stands in for another, which means as per this principle, after the insured, the individual has been compensated for the incurred loss. To him, the subject matter that he was insured, the right of ownership of that property goes to the insurer, that is to the company. Now, this is where the factor comes in terms of subrogation, which means to say that in case when any event or any incident has happened, and for that event or for that incident, when the insured person is being compensated from the company for whatever value that has been insured, afterwards, the rights of the property again go back to the insurer. This is very, very important. It does not stay back with that person, but it goes back to the company. This is called as the principle of subrogation. So why this comes into a factor is that because next time, if there is going to be any eventuality, next time there is going to be any emergency or exigency, that has to be again covered and looked back by the company altogether. Moving forward, the principle of contribution that comes into practice. The contribution principle applies when the insured takes more than one insurance policy for the same subject matter. It states that the same thing as in the principle of indemnity, the insured cannot make profit by claiming the loss of one subject from different policies or other companies. Now, for the same property, if I have gone for multiple insurance, or for the same subject matter for house or for car, if I have multiple property insurance, I cannot go back and keep on claiming insurance from different companies. I am not in a position to make any profit out of the insurance claim. So once the insurance has been claimed for that emergency or for that exigency, it ends up there. Then the property right again goes back to the company. We cannot keep on claiming for the same incident under multiple places or multiple titles. That is because the principle of insurance says it that we are not doing this business for profitability. We are doing this principle only for covering that person under the particular situation. Now, the principle of loss minimization. The principle of loss minimization says that an owner, it is an obligatory part of the insurer to take necessary steps to minimize the loss of insured property. Now, the principle does not allow the owner to become irresponsible or negligent just because the subject matter is insured. Now, let's take an example here. Let's say that I am doing the business of a petrol bunk altogether. Now, there are enough precautions that has to be taken before I start taking up the business of supplying petrol and diesel from my bunk. Now, if I have not taken that precautions, now if I have not taken the necessary steps of covering the basic factors and then I go and claim the insurance, I will be definitely subjected to a penalty. The reason is that insurance says that it is the responsibility of the owner to check for the basics. The fundamentals that are governed in terms of protecting your house, your property, your company, or your basic factors have to be in place. After that only insurance will come in terms of serving the purpose in terms of emergencies or exigencies only. With this, I come to the conclusion of this particular session. I hope and believe that all the information provided in this session are of great help and resource to you. In the upcoming session, we will be talking about the non-life insurance and its practices. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me on this wonderful session.